Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. It's 2025, December 23rd, and today's vibe is, stocks are calm, gold is screaming, and the dollar is doing its worst impression of a sturdy pillar.
Gold is screaming like it saw my credit card statement. Why is it at record high levels while everyone is also saying rate cuts soon, like it's a holiday carol?
Because markets can want two things at once, lower rates and protection. Today, we'll hit four stories. Gold ripping above roughly $4,450 an ounce, Nvidia's reported H200 shipments to China, stocks holding gains into the last major data of 2025, and copper flirting with $12,000 a ton.
That's a wild dinner party. Gold, chips, data, and copper. Sounds like my pantry when I'm pretending I can cook.
Story 1. Gold. One item says gold jumped about 2.4% and breached roughly $4,450 per ounce on heightened geopolitical risk, with soft U.S. data hinting at more aggressive rate cuts. Another wrap notes gold breaching $4,400 while silver also pushed to fresh highs.
So gold is doing a victory lap because the world is stressful and the dollar is having a bad hair day. But explain it like I'm 5 and also like I have a brokerage account.
It's basically like this. Gold doesn't pay interest. So when interest rates are high, gold has to compete with bonds that do pay you. If traders believe rates will fall, that competition weakens. Gold looks more attractive. Add a weaker dollar, and gold often rises because it's priced globally in dollars.
So if rates go down, gold's like, finally, I'm not losing to the guy who pays coupons. Also, silver is tagging along like the friend who shows up uninvited but somehow makes the party louder.
Why it matters for normal people. When gold and silver surge, it's often a signal that investors are anxious about inflation, geopolitics, or currency value. Practically, it can affect jewelry prices, some electronics input costs, and it can change how diversified portfolios behave, especially if you hold broad commodity funds or miners.
Actionable question. If gold is up this much, is it too late? Because my brain only buys things after they go vertical. I'm basically a candle-chasing algorithm with feelings.
Actionable framework. Don't treat it like a lottery ticket. If you want gold, size it like insurance. Small, steady, and rebalanced. And if you're already in, consider whether your allocation drifted. A big move can turn a hedge into a bet without you noticing.
Okay, story 2. Nvidia and China. I saw the headline about H200 shipments before Lunar New Year. Is this like a we found chips in the couch cushion situation?
The report says Nvidia told Chinese clients it aims to start shipping H200 AI chip modules to China by mid-February, potentially fulfilling initial orders for an existing stock. The item mentions shipments totaling about 5,000 to 10,000 chip modules, equivalent to roughly 40,000 to 80,000 H200 AI chips.
That's not couch cushions. That's like finding a whole Costco pallet behind the sofa. Why does this matter to investors, besides chips go burr?
It's basically like a restaurant with a complicated menu and new rules about what it can serve. If shipments can happen, revenue recognition and utilization improve. If rules tighten or logistics slip, you get delayed sales, inventory risk, and uncertainty. Markets hate uncertainty more than they hate bad news.
So the takeaway is not buy the chip stock, it's watch the rulebook and the delivery schedule, which is also how I should live my life, but here we are.
Story 3. Stocks holding gains ahead of the last major data of 2025. The key point is positioning. After a strong run, traders are waiting to see if remaining data meaningfully shifts expectations for interest rate cuts.
This is the market equivalent of everyone standing around the thermostat. Is it cold enough for cuts yet? Meanwhile, gold is already wearing 3 sweaters.
Exactly. Practical impact. If you're a long-term investor, the move is to avoid making a whole new portfolio based on one data print. If you're adding cash near year-end, consider spreading entries because thin holiday liquidity can exaggerate moves both up and down.
And story 4. Copper near $12,000 a ton. Copper is like the economy's mood ring, right? If it's that high, are we booming or just pricing in supply chaos?
The item says copper edged toward $12,000 a ton, nearing an all-time high, driven by supply setbacks and tariff-related trade dislocations, fueling a months-long rally. Translation: part demand story, part supply story, plus policy friction that changes where metal flows and at what price.
So if copper is high because supply is messy, that's not exactly yay growth. That's more like the plumbing is expensive, which is the scariest sentence in homeownership.
Quick recap. Gold is surging on geopolitics, softer data, and rate cut expectations. Nvidia's reported China shipment plan highlights how inventory and policy can move earnings. Stocks are steady but sensitive to the last key data. And copper's rally mixes supply constraints with trade distortions. If you found this useful, subscribe and tell us what you're watching into 2026. Rates, commodities, or tech margins.
And drop a comment with your one rule for not panic buying gold at the top. Mine is, I must wait 24 hours and consult a spreadsheet, because spreadsheets have never emotionally manipulated anyone.